Thank you so much for joining us for our first carrier update this morning. What's going on? Things look pretty steady. Is that the case?
Yeah, we're still steady. We're still in that holding pattern. Things are kind of steadily dropping right now. I pulled up the, seasonality chart, the tender rejection seasonality chart, just to compare year over year. This purple line looks like the one that makes the most sense to compare it to because this was back in 2018 when tender rejections were relatively elevated as they are now,
right.
Up over 20%. But you see, it's still really hard to compare May because we bounced at the early part of May and then started to come up. And then we had that, again, a booming summer. That is not the case so far. We're dropping, even though we're still higher than we were at that point in time. So it's still a little early to call that this is going to be, some sort of epic explosion of tender rejection rates this summer or anything like that. I don't know if it necessarily will be. It's hard to maintain this level of tender rejection rate. And one of the things that's going to keep these tender rejection rates under control, Kaylee Nix, is the fact that we are seeing increased contract rates. So we've seen a huge explosion in contracted rate pricing over the last 6 to 7 months. If we pull up the next chart here, this is our van contract initial reporting. So this is a data set that is based on over almost $100 billion worth of invoices over the last 4 years. It's a lot of money. And this is kind of the average contract rate. So the data scientists kind of clean this up, but they kind of do a little statistical magic on it to make sure that it's the most relevant. So this is showing you the directionality of contract pricing. So contract rates.
Everything's going up.
It's going up and to the right, as we like to see in a lot of cases. But I don't know if shippers really like to see this necessarily. But this is actually decent. Over the last little bit, it's pretty healthy growth, but it's still very strong year-over-year growth by a long shot. So $2.44. The average contract rate, and of course contract rates are those long-term agreements. The spot market gets a lot of the press, a lot of the attention because it's super volatile and it changes on a daily basis. The contract rates, they tend to operate on annual cycles. So this is where, this is the time of year too where February through March we see, or February through April really, we see a lot of implementation of new rates. We've talked about mini bids, and that also is considered a long-term agreement because it's more than one load. And these are obviously increasing. We saw this kind of dip in February, and we thought things were kind of settling down. Not so fast.
Not the case.
Yeah.
So if you're a shipper, should you be playing contract rates or be like, we're just going to ride the spot market and see what happens?
Well, it looks like the good news for the shippers is that these rate increases are starting to make a difference. One of the things we were talking about yesterday with Mike Vincent was the fact that it's, tender volumes are staying steady. So demand is staying relatively high. And the fact that carriers are in better positions across the country, it seems to be in play, as they've figured out like, hey, there's going to be a lot of freight out of Los Angeles, there's going to be a lot of freight in Atlanta, and they're kind of having this seesaw battle back and forth. But also adding to that is the fact that we're seeing these increasing contract rates. It's going to make carriers a little bit more willing to stay in their contract because that's what tender rejections are. They're rejecting contracted freight.
Right.
And that's something that these contract rates, the higher these rates go, the more willing carriers are going to be able to get over there, especially if they're out of position. If they're like 50 to 100 miles away and their contract rates are just break even, they're not necessarily, they're going to look for other options, or they're going to probably have other options in the market that we're seeing today that's going to help them make a little bit more money and maintain that utilization that they so desperately need. So let's check out the map and see what's going on in the country today. Not a lot of changes overall. We were talking about Atlanta yesterday. We'll hit that again here in a little bit, but the hot spot of the day in terms of weekly change in tender rejection rate, Baltimore, Maryland over here on the mid-Atlantic side. If we pull up that chart, we'll see that Baltimore is having the biggest growth in tender rejection rates week over week right now. Baltimore is not necessarily a huge freight market.
Right.
It's not a huge one, but if you are in the area, you're not really liking being there anyway. So if you are a carrier, you're kind of looking for a way out. It's very congested up there. You've got DC and all that traffic, and there's a lot of short haul freight moving back and forth between the city. Tender rejection rates, however, are jumping right now this week, and it's not necessarily a low amount of volume. It's very volatile up there. So over 30.51% tender rejection rate, almost a third of the freight being rejected.
Yeah, that's a lot.
Yeah, and if we pull up the next chart and take a look at Atlanta real quick, This is our Atlanta market. Now, this is the interesting thing. Kyle Lintner pointed this market out yesterday on BAMF, the inaugural episode. I find this to be very interesting when we see this is the reefer tender rejection rate going up, trending higher, and the van tender rejection rate going lower. So the reefer activity out of Atlanta booming right now. Produce season out of Florida, making it very hot for the reefer carrier, but van rejection rates coming down. This is a very interesting setup because Atlanta is the single largest freight market in the United States for van freight. So definitely a market to watch here in the next coming weeks.
Awesome. I caught your guys' show yesterday, and it was pretty great for the first episode. Every Monday at 2 p.m., right?
Every Monday, 2 p.m., except for Memorial Day.
Except for Memorial Day. It'll be him and Mike Vincent.